Welcome to the Agent of Wealth podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth. This is your host, Mark Bautis. We have a special guest on today's show, Mark Podolsky, who is widely considered the country's most trusted and foremost authority on buying and selling raw, undeveloped land within the U.S. Over the past 2 decades, Mark has completed over 5,000 unique transactions. Mark's also the author of Dirt Rich: How One Ambitiously Lazy Geek Created Passive Income in Real Estate Without Renters, Renovations, and Rehabs. Mark, welcome to the show.
Marc Bautis, thank you so much for having me. It's a pleasure and an honor.
So I'm excited to talk about passive income and investing in raw land. A lot of people I work with as a financial advisor, they have those dreams of passive income, financial freedom, but usually they aren't sure where to start. And then also, I'm seeing an uptick of people's interest with alternative assets. So I'm interested in learning about raw land and also talking about passive income.
Okay, fantastic.
So let's start off with passive income. I think in your book, you started off by talking about the disease of solo economic dependency. So what actually is that and how do people overcome it?
Okay, so solo economic dependency means if you're personally not working, you are not making any money. So think about anybody with a W-2 job. You don't show up at your job, you're not going to get paid, right? Or if we break it down into, let's say, Robert Kiyosaki's cash flow quadrants, E, employee, S, self-employed. Those people, self-employed are going to be like a financial advisor or a doctor or a lawyer, a dentist. If a dentist's hands aren't someone's mouth, they're not generating any income. So they're solo economic dependent. Now, if we go to the right side of the quadrant, when we go to a big business or investments, that business that you create one time can start generating passive income for you. For example, someone like me, I work maybe 30 minutes a week in Frontier Properties, my investment company. So that money is generating every single month. Now, is anything completely passive? No. Even if I gave you $1 billion, you would still have to take the time to deploy that capital and make it efficient. So nothing's 100% passive, but we can be very mindful about how we're spending our time and then also making investments as well. So those investments are our money's making us money. So we want to be on the right side of that quadrant because we can always make more money. We can't get more time. And so my whole purpose in life is to help people get out of solo economic dependency, because once their passive income exceeds their fixed expenses, they're working because they want to, not because they have to. And they have the time now to deepen all their relationships, move up that ladder of what I call Maslow's hierarchy of needs into self-actualization. Life becomes so much better.
I kind of envision it, and there's someone who maybe is established, maybe they've had their W-2 job for a while. It's almost as if they probably get addicted to that paycheck coming in, and they think of it as financial stability. So I'm sure probably having this mindset of being in the right quadrant, the earlier you start, the earlier or the easier it is. How does someone who's maybe well on their way, who's worked for years and years, how do they transition to it?
It's a really interesting question. And I think that if they're happy and that job is fulfilling for them, they continue doing it. And at the same time, be the pig that builds their house full of bricks and start a side hustle. Mm-hmm. Because I'd say they're taking more risk than somebody that's starting their own side hustle. You would think, businesses are very risky, but I think it's more risky to be an employee today than it is somebody starting their own thing where they have almost total control of what they're doing. I have a friend who works for, a Fortune 50 company, and just out of nowhere, working on this big, $1 billion company, they lost that as a, someone in the ivory tower said, okay, that's not your client anymore. Mm-hmm. And they're losing a big part of their commission income just from one decision. that they have no control over. So I think that somebody who's been doing it a while, they've moved up into the C-suite, it's a good idea to just build a side hustle and protect yourself.
Yeah. And, like you said, it's probably the reverse. People think paycheck stability, W-2 job stability, but it's probably the reverse is true. And, you want to create control over that. And one area I'm seeing it a lot now and over the past year and a half, and probably it has something to do with the pandemic and all the emotions going on, but I'm seeing where, one spouse wants to quit. They don't want to go back to work. And, passive income is a way that can enable that, because I see all kinds of people coming to me and saying, I'm thinking about it. Can I do it? And, you look at it, you do the analysis and you look at it and you're like, nah, this is not going to work. Or maybe you can do it, but here's the sacrifices you have to make, or here's the changes you have to make. And then sure, there are some where you look at it and you say, yeah, you can do it because you've saved up, you have assets. These assets are generating income. So maybe that's like, there always has to be something motivating for someone to want to do it. And maybe this is that switch that people say, yeah, I finally do want to. And, I did mention the W-2 employee and transitioning it, but a lot of times it could be they continue with their W-2 job, and it's just they're taking money that they're making from there and utilizing that to build up that right quadrant, without having to really cut it or do it cold turkey, where they're flipping a switch and all of a sudden they're just basically starting over, trying to, be that, have that business generating those income for them.
Yeah, no, exactly. I mean, I started off in investment banking and I hated it, but, and there was a point where like I wanted to quit. And I went to my wife, I'm like, I want to quit and become a full-time land investor. She's pregnant. She's like, absolutely not. Like, I had responsibilities. So I methodically built up my land investing business to the point where that income exceeded the investment banking income. And that's when I quit.
Mm-hmm. So when most people think of passive income, there's a couple different asset classes that they think of. You'll see probably the majority you hear about are rental real estate, apartments, multifamily properties. Some may think of stocks and dividends, that stocks, and I'm sure there's others. One, what is raw land investing? And two, how did you get into it?
Okay, so I'm going to start with how I got into it first, and then I'm going to walk you through my model so that, Mark, when you're done, you will be able to do it. Okay, great. So as I said, I was, just a miserable, micromanaged, high stress investment banker working in mergers and acquisitions with private equity groups. And it got so bad for me, I wouldn't get like the Friday blue or the Sunday blues, anticipating Monday coming around. I get the Friday blues, anticipating the weekend going by real fast and having me back and work on Monday. So my firm hires this guy. He's telling me that as a side hustle, he's going to tax deed auctions. He's buying up raw land, pennies on the dollar. He's flipping them online, and he's making a 300% return on his investment. This is in 2000. And I'm looking at companies all day long, Mark. Great company, has 15% EBITDA margins or free cash flow. Average company is 10%. I'm looking at companies all day long, less than 10%. So I don't believe him. I got $3,000 saved up for car repairs. I go to New Mexico with him and I do exactly what he says to do. I buy 10 half-acre parcels, an average price of $300 each. I put them up online. They all sell for an average price of $1,200 each, 300%. It worked. So I took all that money, went to another auction in Arizona, which is where I live. Again, it's 2000. There's no one in the room, and I'm buying lots of acres for nothing. I made over $90,000 on that second auction. And then I said to my wife, I'm like, I want to quit. She's like, absolutely not. So I methodically went through it. And it took me about 18 months for the land investing income to exceed the investment banking income. Then I quit, and I've been doing it full time ever since. And the way that I do it is a little different, but I'm going to walk you through it. So Mark, you're in New Jersey. Mm-hmm. And let's pretend that you own 10 acres of raw land in Arizona, where I live, but you owe $200 in back taxes. So you're advertising two important things to me. Number one, you have no emotional attachment to that raw land. You're in Jersey. But number two, you're distressed financially in some weird way because you're not paying your property taxes. And we don't pay for things. We don't value them in the same way. And as a result, the county treasurer is sending you notices saying, Mark, if you don't pay your property taxes, we're going to auction off that property to a tax lien or a tax deed investor. So all I'm going to do is look at your 10-acre parcel. I'm going to look at the last 12 to 18 months of comparable sales. I'm going to take the lowest comparable sale. I'm going to divide by 4. And that's going to give me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer. And let's just say the lowest comparable sale on your 10 acres is 10 grand. I'm going to send you an actual offer of $2,500. Now you accept it because for you, $2,500 is better than nothing. Now in reality, 3 to 5% of people accept my quote unquote top dollar offer. But now that you've accepted it, the next step is due diligence. So I've got to go through this checklist. Number 1, Mark, do you still own the property? Number 2, are back taxes only $200? Number 3, have there been any breaks in the chain of title? Number 4, are there any liens or encumbrances? And then I want to look at for like marketing, like what's compelling about the property? What's my next buyer going to know? They want to know how to get there, what the road's like, what the GPS coordinates are. And all this is outsourced to my team in the Philippines. We pay about $11 for due diligence, and they're connected to an American title company. They get us the GIS maps, the plat maps, aerial maps, everything a buyer's going to want to know. And then we buy the property. Now, if it's an area where I've never been, I'll pay maybe $50 for somebody locally to go out, fill out my property checklist, take pictures, and shoot video for me. So I don't even have to go out and stomp on the property. Now, everything checks out. I buy the property from you for $2,500. Now I've got a built-in best buyer. Do you know who it is? Oh, the neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity to protect your privacy, protect your view, know your neighbor. So oftentimes the neighbors will buy it. Now, if they pass, I'll go to my buyer's list. My buyer's list passes. I go to a little website you may have heard of called Craigslist, 10th most trafficked website in the United States. I go to a smaller one, Facebook, buy sell groups and marketplace. And then I'll go to lands, landmodo.com, landsofamerica.com, landandfarm.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land every day. Now, the magic, Mark, is in the pricing. So the way that I'm going to price this, I'm going to sell it 3 days or less, is all I'm going to ask for on this 10-acre parcel for you to control it and own it and enjoy it is $2,500. I'm going to get my capital out on the down payment, or I might go 6 to 10 months out. And then I'm just going to make it a car payment. Let's say $449 a month, 9% interest over the next 84 months. So it's a one-time sale. I get my money out as fast as possible. Then I get $449 a month coming in every single month on an automated basis. No renters, no rehabs, no renovations, no rodents. And because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, all this onerous real estate legislation. And then it's a simple game. Can we create enough of these land notes where now our passive income exceeds our fixed expenses, and we're working because we want to, not because we have to?
Okay, it sounds really good. So a couple questions come up. One thing we saw a lot with, people for a while were into single family home investing, and all of a sudden the institutions came in and started buying, sweeping up and buying, thousands and thousands of properties across the country. The way you explained it sounds really good. Why hasn't more people done it, including like the institutions come in? Is it just, it flies under the radar? Is it people just don't know, like you have a model, they have a system, they don't have one of those? Or is there something else?
Okay, so there's 2 reasons. Number 1, let's just talk about the general population, right? But you probably had never even heard about land investing until you met me. Why is that? Well, if you go on HGTV or the DIY network, you're not going to see flip this land. The before picture is raw land. The after picture is raw land. It's boring, right?
Yeah.
If I talk to a financial advisor and say, I'm looking at buying a piece of raw land, they're like, why are you buying raw land? It doesn't cash flow. It's negative cash flow. You got to pay property taxes. So your typical land investing strategy is land banking. It's a hockey stick model. It's really, really flat. And then all of a sudden development comes and it hockey sticks up. So there's very few people that want to be negative cash flow on a piece of raw land investment. So it's very non-traditional. Now, the way that I'm doing it, it's like almost like a business. So then the second thing is, well, why aren't private equity groups or hedge funds or big money institutions in this? Because it's too much money for this niche. So if my average deal is $2,500 or $3,000, well, if you say, hey, Mark, I'm going to give you $1 billion, go deploy it. I can't deploy it. It's too big. Now, if I had $1 billion to deploy, like billionaires do, you think about Ted Turner, Warren Buffett, John Malone, the hedge fund manager for the Red Sox, right? They're buying billions in dollars of acreage, but they're buying productive farmland and they're making 8% on their money, which they're very happy to do. But if you want to make 300 to 1,000% doing what I'm doing, having $1 billion is too much. You can't deploy it.
Yeah, and it's still like, you mentioned the average cost of $2,500. It's still from the Northeast, from New Jersey. It's hard to kind of visualize that land would be so cheap in certain areas. How do you geographically? Is it areas that are close to you geographically? Do you look all over the country? How do you kind of pick where you're going to deploy this model?
Hey, Mark, let's face it. Nobody wakes up, thinks themselves, boy, I'd like to buy some raw land in New Jersey today, unless you live in New Jersey. So we want to go to Arizona, Nevada, Colorado, New Mexico, Texas, Washington, Oregon, California, Florida. So we're talking about the Sunshine States, Southwest, California, a little bit in the Northwest, and then Florida. So these are areas that have tons and tons of inexpensive raw land, an hour to 3 hours from the nearest city. You don't have an environmental issue in those areas. Not talking about Ohio or New Jersey, or it's very industrial. So you have to worry about Superfund sites or Pennsylvania. So we're going to avoid basically East Coast. Look, I've done deals in Tennessee, Arkansas, Missouri, Oklahoma. But again, our biggest buyer pool is going to be on the Southwest, Northwest, California, and Florida. So that's really where I want to focus.
Take it one step further. How do you then, you pick your geographic locations. How do you then start identifying?
So then I'm going to go and look to find where other land investors are. So if, let's just say we're on a big lake, we're fishing, right? And you see all these boats in one little bank, that's where they're catching the fish. I want to go over there. I know it's counterintuitive, but I want to go where I know definitively deals are being done. To get started, I would just kind of follow somebody like me. Like, where's Mark buying raw land, and make offers.
How many offers do you? I know what you mentioned is 3% is
3 to 5%, maybe a 1% close rate after due diligence. So for every 100 offers, you're going to do a deal on average. So basically, like our clients, we tell them, look, if I said to you, hey, Mark, you want to get in shape, you need to work out 2 hours a day. Or after that first week, you'd be like burnt out and you'd be like, this is terrible. But if I said, hey, Mark, 7 minutes a day, do a quick workout, you could do it. So we do a 7-minute workout with our new clients, basically do 20 offers a day. That's manageable, because when you're starting out, if you start making 1,000 offers a week, well, when those deals start coming back in, you don't have the systems, the people, the software in place to handle that kind of volume. So you want to do it. You want to manage your growth. So 20 a day is a really good starting place.
And I know you mentioned who your target, once you acquire the land, your target market, a lot of times is neighbors and then buyers list and other sites. But how do they look at, like, what's there? So obviously a neighbor, they might have a personal interest in,
right? Why does anybody want to buy raw land?
Yeah.
There's a lust for land in this country. Lots of people grew up hearing you want to own land. Lots of people will, if you're in the city, you yearn for a more rural, secluded area. Recreational users want raw land. Military people want raw land. People that don't like people want raw land. So there's just a big market for it.
I know you mentioned you have a formula, because that was one of the questions that I thought of, as we were going to talk about this, is how do you value raw land? Obviously, it's like any other real estate asset where it's what someone will pay for it. But, a lot of times with maybe like an apartment or a multifamily, you can look at the cash flows and kind of make an offer based on that. How do you do it on the raw land side, determine your valuation that you're willing to pay for it?
So basically, I look at the lowest comparable sale and divide by 4, and that's it. Now, if I can't get a good comparable sale, the quick and dirty way might be look at the assessed value and divide by 2.
Mm-hmm. How has the land market changed over the past year and a half during the pandemic?
It's been ridiculously, it's just unsustainable. I can't keep anything in inventory because everyone wants assets. Cash is trash. And now what I was paying for, a year and a half ago, it's 25% more. And now I've got to raise my prices 25, percent. So the ratios have stayed the same. So we're still making just as much money, but we had to raise our offers. So in the way that we know that is that 3 to 5% guides us. Because if my response rate's less than 3%, I know I came in too low to the market. If it's over 5%, I came in too high and I have to retrade.
Right.
So we use that metric really seriously. So right now, it's very tough to buy, but it's super easy to sell. It kind of reminds me of 2006. It's just white hot.
Right.
I don't know how sustainable it is, and we're due for a recession. So the problem is, and maybe I'm wrong, but the Fed can't raise interest rates because then they won't be able to pay off their debt. So they're like stuck in a way. And land is a traditional inflationary hedge. So you got land, gold, silver, Bitcoin.
So like it's like every other asset, it's inflated, right?
It's
right
inflated right now, but it's still selling, it's still cash flowing.
Sure. But before like this kind of craziness, I think one thing that people would be concerned or nervous about is getting stuck with the land and not being able to sell it.
It's never happened to me. It's never happened to my clients. In fact, I remember talking to my wife about it and saying, because she's like, well, who's going to buy this land? She's like, what if you get stuck with it? I'm like, well, it's a piece of paper. It's not going to take up any room in the garage. I'm like, I guess I could trade it, barter it. Maybe I get free dentistry or free haircuts. I'm not going to get stuck with it. So it's true. I mean, there's a pig for every barn in this country. For a piece of raw land. Like I've never been stuck with it. If you sell at the right price, easy terms, it'll sell. Somebody wants that piece of property. I had a deal years ago. I bought property off the side of a mountain, 40 acres in New Mexico. Only 15 acres of it was even accessible. I messed up my due diligence. So I'm like, oh, I paid $2,500 for it. I'm like, oh, maybe I'll break even on eBay. So I started with an auction at $1, no reserve for 10 days. By the first day, it was at $2,500. Mm-hmm. By the 10th day, it was over $32,000. I'm like, what is going on with this land? I'm getting nervous. Like, did I misrepresent it in some way? So the guy wins the auction. I call him up immediately. Like, you see the map, right? You see, like, you can't access, 25 of these acres. He's like, it's perfect. He was a film director in LA and he wanted to film out there and he didn't want to deal with the county and getting permits. So it was cheaper for him to get that land than deal with permits.
Like you said, every pig has a barn. So
there's a pig for every barn for sure. Yeah. But the reason is, we're making our money on the buy. So with 300% margin of safety, if we do end up on the wrong side of a deal, well, we have enough margin, so we make 50%, 100%. Like no one's going to complain,
right? And so, how do you help people with this? Or is it in the realm of being a coach, trainer? You help people implement systems. Where do you come in?
Yeah, so we can help everybody in every stage. If you go to landgeek.com, you can start there, and we have free courses. And then if you really want to go deeper, we have a do-it-yourself course. We have a group training course. So think about it like, again, with like using the working out scenario, right? If you have the discipline to get up at 5 a.m. and can work out on your own, we have that for the do-it-yourselfers. If you're the kind of person that wants accountability, but doesn't want to make the investment in a one-on-one personal trainer, we have group coaching. And then of course we have the people that, really want to accelerate and they go into one-on-one coaching as well.
How does the busy professional do it? Because it's, it sounds like you're doing when you're doing this yourself, you're doing a mix. Some of it, the work you're doing, some of the due diligence you're outsourcing. But I guess for that person that says, well, this sounds great, but I don't need another job or I can't take on another job. How much time is really involved in this process from start to finish?
We ask all our clients when they first start to devote a focused 2 hours a day. And if you don't have that, it's probably not a good idea to get started in it, because you are building a business. And you're right. Like if you don't have time to hire virtual assistants, learn software, then you probably don't have time for it. But if you have 2 hours a day, you can start building up that machine, and you should be able to travel around the world doing this business.
And is it scalable to the point where it gets to somewhere where they can devote less and less time? Or is that something that, it's a business, it's a constant, time demand that's going to be in place?
I work for 30 hours a week in my business. Scott Todd has done thousands of deals. He works 30 hours a week in his business, or 30 minutes a week. So about 2 hours a month, essentially. You can get to that point. So you have, you start just building your team. You basically have an acquisition manager replace you, and they sort of manage that virtual assistant team. And we help people implement it step by step. But you have, right out of the gate, you can automate 90% of this business with software and inexpensive virtual assistants.
Yeah. And I think, like you mentioned, there's really nothing that's fully 100% passive, and a lot of people think rental real estate is like that. And even, they'll say, oh, I'll have a property manager, and, they get pulled into a lot of different things that very quickly can become discouraging if you're thinking that, okay, I'm going to, invest in this real estate and kind of go sit on a beach somewhere. So yeah, I think people are interested in that passive income and the true passive income where they're, it sounds great. And then all of a sudden they have to devote, 40 hours a week to managing them.
Yeah, no, I agree. I mean, nothing's really 100% passive, but this is about once you've built the systems, you're really, then you're just kind of managing it.
Cool. Like I said, everyone is looking for alternative ways of generating income. And it's probably from some diversification where they want to diversify from some other assets, other reasons people think maybe there are other things out there that people are taking advantage of. Like you mentioned, no one goes out there and says, I'm going to be a land investor. It's something that, they're not exposed to. You don't see it on TV. You don't get blasted by it from the media. So yeah, I mean, I think people are always open to other opportunities. So I appreciate you being on. I think, you gave us some really good information on land investing. It's a topic we've never covered on the show. And so definitely appreciate that. How best can someone reach out to you if they want to find more information?
Yeah, I think the best place to get started is thelandgeek.com. And if they, I think the best way to learn anything is to do it. So we've got a course for free. If they go to landgeek.com/quick deals, they can learn how to double their money 30 days or less. You really shortcut that process that I talked about with you and see if it resonates with them.
Great. Thank you. We'll link to all that on the show. Really appreciate you being on. And thank you everyone for joining today's episode.
Thanks, Mark.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.